We've already gone over the numbers, the loss of $1.70 per share in the first quarter, revenues down about 26%. Give us some perspective in terms of how bad the situation is right now in the commercial airplane market and what you're hearing back from your customers in terms of future orders, possible deferrals, cancellations, et cetera.
Hi, Phil. It's good to be with you. Before I jump into that question, I'm going to add my thanks, like everyone else, to all of the healthcare workers, industry that are supporting so many of us, trying their best and putting themselves at risk to keep us in good health. The market, as you know, we feel a little bit like we're the tip of the spear, aviation, in light of all of the shutdowns, not just here in the United States, but pretty much everywhere in the world. The ramifications are big. For the most part, the industry is not interested in taking delivery of airplanes at the moment and or prepaying against contracts that we have in hand. And so as a result, there is this moment in time where everyone is sort of frozen, trying to contend with the dramatic reductions. In the United States, passenger traffic at this moment is 95% down from where it was a year ago. That's remarkable. Flight schedules are not down as severely, but they are down significantly, simply because the airlines have been allowed to continue with connections and points, just with much less frequency. So the world market has been stunned. It is a bit frozen, but we remain confident that it will come back. We talk to airline CEOs every day, every week. Most of the governments have come forward with their support. Certainly here in the United States, they have. That has caused, there's been a real thaw with respect to the thinking and the planning forward with respect to markets. So I'm, believe it or not, I'm more confident right now than I've been in quite some time. And I believe the thaw is beginning.
Dave, you guys are announcing that you're going to be cutting your payroll by 10%, basically 16,000 of the company's 160,000 approximate employees, with the biggest impact being on the commercial airplane division. Are you confident that those job cuts, along with the slower production rates that you're introducing starting now all the way over the next couple of years, will be enough? In other words, that you guys are taking the steps that will avoid having to come back and perhaps cut even further, let's say 9 months or a year down the road?
Well, I'm never going to say that with pure authority, because I'm not sure what the world's going to look like in 9 months. But we have factored in everything we can think of. The recovery with respect to passenger traffic that we have modeled is roughly 3 to 5 years before we get back to the environment that existed pre-COVID. We get back to 19 levels in around 3 years. And then to get back on the growth track, it might take another couple of years. So we've been conservative in that respect. Our planning is mostly built around the refleeting of a variety of airlines. Everyone is looking at their fleet plans. The retirements are going to be significant. And the investments, while not what they used to be in a growth environment, will continue to be made to get more fuel efficient, cleaner airplanes in the sky and create competitive advantages for each of our airlines. So that's what we've modeled. We have stress tested the model in as many ways as we can think of. The production rates are tailored for that model. And we believe the markets and the credit markets and liquidity will be there for us. But I don't want to suggest that in 9 months, if there's another spike, that things won't change.